An eye for an eye. You probably think that this saying came from the Bible, right? But the origin of this saying is even older. That's right, it dates back over 4,000 years, etched on a stone tablet by an ancient ruler. This 7-foot tall black stone slab contains 282 laws, which we know today as the Code of Hammurabi. And while these ancient laws are thousands of years old, they still shape modern finance and legal systems. And today, we're going to do a deep dive into these codes. This is the story of Hammurabi. So, who is Hammurabi and why is he such an influential figure in finance of all things? Well, you see, Hammurabi was the 6th king of Babylon, a city located in what we know today as Iraq. And to understand his influence and power, you need to understand just how massive his empire and his power and his reach was. You see, he ruled from 1792 BC to around 1750 BC. And at this point in history, Babylon wasn't yet a massive empire as we think of today. It was just one of the many small city-states scattered across Mesopotamia, a fertile region between Tigris and Euphrates rivers. This area is often referred to as the cradle of civilization, and with good reason. It was where some of the earliest advancements in human culture took place, including the development of writing, large-scale agriculture, and most importantly, laws. Over the course of his reign, Hammurabi expanded Babylon's reach by strategically waging wars and forming alliances. And that's how he created the Babylonian Empire. By the end of his rule, Babylon controlled much of southern Mesopotamia, and Hammurabi had earned a reputation as a capable and shrewd leader. He knew how to be efficient, but also how to influence his kingdom and his people. To improve trade, he built a canal to help transport goods, and he even repaired an older one. He also cancelled or paid off debts for many of his subjects, all of which made him very popular with his people and brought prosperity to his kingdom. But you see, Hammurabi wasn't just a conqueror. What really set him apart from other rulers at the time was his focus on law and governance. Here's the thing, in Mesopotamia, life was complicated. Under Hammurabi's rule, society was divided into 3 main classes. The first was Amelu, which was at the top, which included an elite person with full civil rights. Their birth, marriage, and death were officially recorded. They had a lot of privileges, but at the same time, they were also subject to harsher punishments and higher fines. This group included the king, his court, high-ranking officials, professionals, and skilled craftsmen. Then there were the Mushkenu, who were the free people, but they didn't own land. They had to accept monetary compensation for offenses, pay lower fines, but live in a separate part of the city. And all the way at the bottom was the Ardu, or the slaves. Now this was an interesting setup because the masters took care of the basic needs and the slaves received compensations that were owed to them. And the Ardu could actually own property, have their own slaves, and even buy their freedom. Now take that with a pinch of salt because they had certain privileges, but living a life of a slave wasn't all too glorious either. Now, all 3 classes of people, the farmers, the merchants, the artisans, the soldiers, the slaves, they were all trying to navigate a world that was highly chaotic. You see, trade was booming, cities were growing, but at the same time, more people were coming in and there were more problems. Disputes over land, debts, theft, and even murder were all too present. Hammurabi's reign came at a crucial moment in Mesopotamian history. His empire brought together a diverse set of people and cultures under one legal and administrative system. Managing this kind of society was extremely difficult. He realized that he needed a system that enabled him to govern more effectively. This realization right here is what altered the course of his empire. It led to the creation of the Code of Hammurabi. Now, the Code of Hammurabi wasn't just a small list of do's and don'ts. It was a comprehensive list of 282 laws covering everything from family relationships to business dealings and even criminal justice. That's why his code helped stabilize the region and allowed for more consistent governance, trade, and even cultural exchange. Babylon flourished under his leadership, and Hammurabi's laws helped ensure that prosperity wasn't undermined by internal chaos. So, what did this code look like? It actually is inscribed on a large black stone slab. Think of it as an ancient billboard. This way people could see the laws for themselves in person, and it sent a very clear message. Hammurabi wasn't messing around when it came to order and justice. At the top of the Code of Hammurabi, there's a sculpture showing King Hammurabi standing on the left, speaking to Shamash on the right, who is the sun god and god of justice in the Babylonian belief. Below them is the code itself, carved onto the stone and written in cuneiform. Cuneiform, by the way, is a writing system that was used in ancient Middle East to record information in several languages. So the code starts with a prologue and talks about Hammurabi's royal power and his accomplishments. But then it breaks down into 3 sections: procedural laws, property laws, and laws for Babylonian citizens. And these laws were groundbreaking, covering things like property ownership, pricing structures, interest rates, contracts, and so much more. But before we go into the actual financial implications of the code, you need to understand that this sculpture was 4,000 years old. How on earth did we find it, and how did it impact modern societies once they discovered it? You see, in 1901, a French mining engineer led an archaeological expedition to Persia, where they set out to uncover ancient treasures in the Elamite capital of Susa, which is located 250 miles from the heart of Hammurabi's kingdom. And during the dig, they stumbled upon something remarkable: the steel slab of Hammurabi, broken into 3 pieces. Once they unearthed this ancient artifact, it was carefully packed and shipped to the Louvre in Paris, where it is still displayed today. Within a year of its discovery, the steel was translated and it made waves across the world because it was recognized as the earliest known written legal code. And what made it even more intriguing was that the laws in the Code of Hammurabi were significantly older than the Hebrew Old Testament, yet somehow there were striking similarities in both sets of laws. And what's interesting is that all these laws were written in the if-then style, basically saying that if someone does this, then this will happen. For example, if someone is proven to have stolen an ox, they must pay 30 times the value of the stolen ox back. If someone is caught stealing or committing robbery and is convicted, then he shall be put to death. That was law number 22, by the way. So there are a couple of strange laws too. For example, if a man neglects to maintain the bank of a river and it floods the fields, he shall be required to compensate for the damage of the cause of the flood. That was law number 53. So there were some really practical laws there, and some of them were famously harsh, with punishments like cutting off hands, tongues, or ears. And in many cases, the punishment was simply death. But most of Hammurabi's code, around 178 laws, were actually about practical rules covering property and civil matters. I mean, the exact wording of his laws is probably not something that we use today, but the essence of his code from ancient Babylon is surprisingly familiar. The code details laws about crimes and their compensations, covering everything from theft, assault, to murder and land disputes. It also addressed determining guilt or innocence and handing down punishments where applicable. The core of this system isn't all that different from what we see today in courts worldwide. The basic idea of holding people accountable for their actions, ensuring justice, and resolving conflicts in an organized way hasn't changed all that much since Hammurabi's time. The most famous and interesting of those laws is an eye for an eye, a tooth for a tooth. Many of us know this principle from the Old Testament, but it actually came from Hammurabi's code. Now, laws have obviously evolved and morphed over time, but this underlying idea of proportional punishment, where the consequences matches the offense, is very much alive in the legal systems today. By the way, over 97% of you watching this video are not subscribed, but if you could subscribe, I'd be really grateful. Alright, back to the video. Now, when it comes to finance, Hammurabi's code recognized that different economic players will always exist and that everyone must play by the same rules. Let's take a look at price controls for an example. In today's world, you probably have set prices for medical procedures, construction work, or even farming equipment rentals. Well, Hammurabi was well ahead of the game. He made sure that prices were strictly controlled for certain professions, from surgeons to builders and even shipbuilders. Let's look at surgeons as an example. Take law number 215. This law sets the fee for surgeons based on the patient's social rank. So if a surgeon saved a free man's life, they'd get 10 shekels of silver. But if the patient was a slave, the surgeon would only get 2 shekels from the slave's owner. It's a clear sliding scale based on the social status of the patients, which might not seem super fair by today's standards, but it was a norm back then. And then it gets really intense. If a surgeon messed up, like causing the death of a free man or damaging someone's eye, for example, Law 218 says that they would cut off the surgeon's forearm. And if the victim was a slave, the punishment was still severe, but instead of cutting off the surgeon's arm, they would have to replace the slave or pay half the slave's value in silver. Different stakes depended on the social rank, but it was still pretty harsh. Now, obviously, it wasn't just surgeons under price control. Builders, farmers renting out equipment or materials also had fixed prices. Hammurabi made sure that everyone knew exactly what to charge, and the code was literally carved into stone, and the prices were set in stone too. Now, it's not entirely clear if all the prices were fixed or just the ones mentioned in the code, but Hammurabi's goal was very obvious. He wanted fair wages and fixed prices so that the economy could run smoothly. Now, speaking of wages and salaries, let's look into it. Now, Hammurabi wasn't just randomly assigning wages to different jobs or services. He based them on what we'd call today as marginal productivity, which measures how much we value a person based on how much they generate or how productive they are. It's fascinating because this idea of linking wages to productivity is central to how we think about wages and economic value today. For instance, in the code, if you're ferrying a bunch of passengers on a boat, you charge 3 geras per day, and according to some calculations, that's around $26. By the way, gera is an ancient unit of weight or currency that was used in the Babylonian system, as well as other Near Eastern cultures. So in Hammurabi's code, it likely functioned as a small denomination of silver or other form of money. Anyway, back to the example of ferrying passengers on boats. So if you're dealing with a freight boat, which might require less attention or effort, it's a bit less money. You'd get 2.5 geras. It's almost like he was outlining an ancient form of tiered pricing, where the more you carry or handle, the more you earn. And when it came to animals, Hammurabi was equally meticulous. For example, the rate for hiring a, donkey for farm work was twice as much as hiring a younger or a smaller animal. Hammurabi recognized that productivity varied not just amongst humans, but with animals too, and that's reflected in the pay. In his code, he also had some complex calculation about how hiring an ox, a cart, and a driver was different. The rates varied based on whether the farmer hired all of them individually or bought all 3. So it was a clear nod to marginal productivity, the idea that the value of additional resources, in this case the ox, the driver, and the cart, is reflected in the higher cost when they were added into the mix. Now, even day laborers were subject to this productivity-based system. During the hot, grueling summer months, when days were long and work was tough, laborers were paid 6 geras per day, which would be about $52. But for the rest of the year, when the work was less intense, they'd only get 5 geras. Hammurabi was conveying that the severity or harshness of the work conditions impacted pay as well. Now keep in mind that these were all carved in a stone that carried the Code of Hammurabi. So when we use this term even today, set in stone, that's where that saying comes from, because Hammurabi set these prices in stone. In a way, it helped with governance, but it also showed a lack of flexibility. It doesn't take into account the concept of changing prices based on supply and demand or inflation, but we're going to get into that in a bit. But in any case, the structure laid out in the code gave us an early glimpse into what would later probably become the marginal productivity theory, a fundamental economic principle that's used today. It's the idea that wages and costs should be directly related to how much output or value something or someone can produce. Now, if you're doing a harder job and ferrying someone or working in the scorching summer heat, you're going to get paid more. It's a pretty straightforward concept, but one that was pretty revolutionary at that time. Now let's talk about how trade worked under Hammurabi's code. Trade wasn't just about goods changing hands. It had its own set of rules and regulations, and they were pretty strict. Let's say you're a merchant in Babylon lending grain or money to someone. And let's say you lent 1 gur of grain. A gur of grain was a unit of measurement in the Babylonian system, which represented a volume of about 300 liters or 80 gallons. So let's say you lent a gur of grain, you could charge a 33% interest. For silver loans, if you lent 1 shekel, you'd get 1/5 of a shekel in interest. And these rates were very clearly spelled out in the code. Now, if you were a merchant working with an agent that traded goods like grain, wool, or oil, things got interesting because Law 104 says that the agent had to write down the value of what they were trading and return the money to the merchant. They even had to prepare a sealed receipt to prove that they were going to give the money back. And if the agent skipped this step and didn't get a receipt, any money they claimed would have to be handed over and wouldn't count towards their account. And then you have Law 49, which is about collateral for loans. Let's say someone borrows some money from a merchant and uses a field of corn or sesame as collateral. Now, the borrower gets to keep the crops they grow. It's kind of like the modern concept of secured loans, where you put up an asset to back up your loan, but you still maintain certain rights over that asset until the loan is paid back. This ensured that the borrowers weren't left completely empty-handed while still providing some form of security to the lender. Now let's talk about wine cellars, because alcohol sales were tightly controlled based on the code. They had some rules of their own, like Law 108 said that it's all about fair trade practices. If a wine cellar tried to mess with the grain to drink exchange rate, either by making the drink smaller or taking more money than the grain, then they were in serious trouble. Now how serious? They could be thrown into the river as punishment. Babylon did not mess around when it came to keeping things fair. Now, let's talk about debt, because debt forgiveness in Hammurabi's code is another fascinating topic, because it really shows the level of detail and planning in the Babylonian legal system. Babylonians really understood that life wasn't always predictable and that debts weren't always repaid. So what do you do there? Crop failures, illness, or bad luck could plunge someone into debt. And when people couldn't repay their loans, the consequences were severe, often leading to the sale of their family members into servitude. Imagine that level of stress, knowing that if things went wrong, you might have to sell your loved ones to keep things afloat. This is where Hammurabi's code stands out. It didn't let that hardship drag on forever. Under Law 117, if someone was forced to sell their wife, son, or daughter to pay off their debts, they weren't stuck in that situation for life. The code limited their servitude to 3 years, and in the 4th year, they would be set free. Think of it as an early form of debt relief. Basically, Hammurabi recognized that while debts needed to be repaid, there had to be an end to it. Now, this wasn't just a humanitarian or a compassionate gesture. It was smart economics on the part of Hammurabi. If too many people were trapped in lifelong debt and servitude, the Babylonian economy would have suffered. After all, entire families would be bound to work off debts indefinitely, and they wouldn't be able to participate in the economy in meaningful ways. Now, Hammurabi also took steps to protect people from unscrupulous lenders. Law 49 says that a merchant who tries to charge excessive interest and fails to properly account for the payments is penalized by having to pay back double. Hammurabi recognized that while debt and loans were a necessary part of the economy, it needed regulation to prevent exploitation. Now, we don't have specific records to show how many times he issued these kinds of debt reliefs, but there are sources that say that he did this at least 4 times during his reign. And his successors also followed suit. They issued similar acts of forgiveness which reset the financial playing field for many people in the economy. So this code of law was almost 4,000 years old, and it might seem like ancient and distant, but it actually has a huge influence in how the modern financial systems work today. You can see Hammurabi's fingerprints all over things like loans, debt management, wages, interest rates, accountability, and even insurance policies. Isn't it wild to think that a set of laws from ancient Mesopotamia still holds relevance today? One of the most important things about the code is how it introduced the concept of contracts. In ancient Babylon, Hammurabi laid out specific rules about lending, borrowing, wages, and commercial transactions. He basically set up a system where he made these interactions clear and enforceable and helped everyone know what to expect. Now, this might sound familiar because it's exactly what we do today when we sign any kind of financial agreement, like a mortgage agreement, a business loan, or even a credit card contract. Now think about secured loans. This is another area where Hammurabi's laws were surprisingly modern. His code, especially laws 49 and 50, introduced the ideas of using collateral for loans. That's pretty much what happens today when someone takes out a mortgage. You put up a house as a collateral, and if you can't repay the loan, the bank can claim it. The whole idea of debt management also gets a nod from Hammurabi's code. Back in Babylon, if you couldn't repay your loan in cash, there were other options like paying with goods or maybe some of the crops you harvested. This flexibility to offer alternate payments if you couldn't afford cash mirrors the debt restructuring system that we have in modern times. If someone can't pay back a loan, they can often negotiate a new payment plan or a different form of compensation. Wages were another big part of the code because it's fascinating to see how Hammurabi structured payments around productivity. Different jobs had different wages depending on their effort and resources involved. It's kind of like how we look at today's wages based on someone's skill and experience, how much value they bring to a job. Now, another major legacy of Hammurabi's code that still impacts us today is regulation of interest rates. Hammurabi set limits on how much interest could be charged on loans, making sure that people couldn't be exploited with insanely high rates. It's not too different from what we see today with usury laws, which are basically designed to protect borrowers from predatory lending practices. Banks can't just charge whatever they want. They're regulated, and that goes all the way back to Hammurabi. He understood that unchecked interest rates could lead to social unrest and inequality. It's something that we're still battling in today's financial world. And that's not just about borrowing and lending. Hammurabi's code also touched on accountability for merchants, lenders, and traders. If you did business in ancient Babylon, you were responsible for your actions. And if you caused someone financial harm, you had to make it right. Now, according to some experts, Hammurabi's code also paved the path forward for the concept of liability insurance. While the code didn't establish insurance as a concept, some of its laws functioned in a similar way. For instance, if a building collapsed or injured someone, the builder was held liable. In today's world, liability insurance protects people and businesses in similar situations, providing financial compensations for accidents or negligence. It's interesting how Hammurabi's approach to risk and responsibility paved the way for a lot of the practices in the insurance industry today. Now, even though Hammurabi's code covers a lot of economic concepts that are still relevant to this day, there are a few pretty major things that are noticeably missing. One big gap is the complete lack of consideration of the law of supply or demand. While wage and price controls are in the code and they're pretty detailed, Hammurabi made them permanent by carving them into the stone. He didn't take into account things like drought or immigration, like large number of war captives coming into the space, into account that inflates or changes the price of wages. Hammurabi's approach to pricing was much more in line with the medieval idea of just price, similar to what Thomas Aquinas wrote about, rather than the market-driven ideas of Adam Smith, who believed that prices should be determined by supply and demand. Hammurabi's code was based on justice and fairness, but it didn't really take into account market forces. Another significant oversight in the code is that there's no mention of how the government would collect taxes. The code lays out a lot of laws and punishments, but suggests that the state was very involved in people's lives and probably needed a lot of revenue to maintain that justice. The question is, how did the state itself operate financially? And of course, the code is often criticized for very harsh punishments. Some argue that instead of focusing on reforming offenders, it emphasizes on retribution, which may not effectively address the root cause of certain criminal behavior. Now, another glaring issue is debt slavery. If someone couldn't repay their debts, they were forced into slavery for a fixed amount of time, but still they had to go into slavery, which obviously raises a lot of serious ethical issues. But despite these controversial aspects, just imagine how ahead of time the Code of Hammurabi was, and how it still shapes the way we think about money, loans, and businesses today. The code could be ancient, but its influence is woven into the fabric of modern finance. It wasn't perfect, but it laid a lot of foundational aspects of how we think about fairness, transparency, and accountability in today's governance and regulatory measures. Now, if you made it this far into the video, please leave a $sign in the comment to show that you've made it so far, and subscribe to the channel if you haven't already. Also, check out this video about a peasant who essentially ruled Europe. I think you'll really enjoy that video. Thanks so much for watching, and I'll see you soon.